Thanks for staying with us on Point. Asian markets slipped this morning as data showed China's economy growing at its weakest pace in nearly 3 decades, hit by the US trade war while investors debate the depth of an expected Federal Reserve interest rate cut. The world's number 2 economy expanded 6.2% in April-June. That's the worst reading since the early 1990s, but in line with forecasts and within the government's target range. The reading highlights the negative impact the US tariff standoff is having on China as leaders also try and recalibrate the growth model from exports and state investment to one driven by consumer spending. The Hang Seng in Hong Kong was 0.3% up at 28,554 points. Shanghai Composite Index also up 2,942 points. And the Nikkei is closed for a holiday. Wall Street's 3 main stock indices cruised to fresh record closes on Friday, ending the week buoyed by investor confidence with the Federal Reserve set to cut interest rates this month. The broad-based S&P 500 closed above the 3,000 mark for the first time. That's getting 0.5% to settle at 3,013 points. The benchmark Dow Jones Industrial Average jumped 0.9% to end the week at 27,332, and the tech-heavy Nasdaq rose 0.6%, closing at 8,244 points. Let's get some more on the market news. We're going to cross over to my colleague, Arabile Gumede. He's standing by the Johannesburg Stock Exchange. Arabile, there's lots of red on the board behind you. Is that a true reflection of what's happening on the markets today?
Yeah, it certainly is, Nzinga. About 0.1% lower thus far for the markets here locally, of course, following through perhaps from the negatives or mixed sort of sentiment coming through out of Asia in particular, as you noted there as well a little bit earlier on, a little bit of a downward pressure coming through. A lot of the fears really around that Chinese GDP number, 6.2% in the second quarter. How does that impact things, of course, then across the rest of the globe? Demand out of China perhaps not seemingly where they'd like it to be. They've really survived on a whole host of stimulus packages, and it's bound to see the Chinese economy perhaps come up with a few more of those in order to help that economy. But how that fared with the rest of the globe and what sentiment it's brought through, well, here are the numbers on that, and we'll get into the detail in just a bit. Well, as you can tell, that's the market picture there. Then a whole lot of green in other areas, but certainly not necessarily on our main board. Let's chat then to Bright Khumalo from Vestact Asset Management as we unpack the detail a little bit more. Bright, thank you so much for the time. But just a touch down, not too much to really write home about, but the rest of the globe seemingly green. A couple of fears perhaps with regards to the Chinese economy?
Yeah, I mean, you saw those Chinese numbers coming out. Obviously, the bulletins that were coming, my favorite said something like 6.2%, the slowest in 3 decades, right? That's from Bloomberg.
Yeah.
Well, what they forgot to mention is that, it's still growing at 6.2%, right? And that's very positive considering the fact that the retail sales numbers also came at 9.8%, which was way above anything that anyone was expecting, whereas the 6.2% was actually at par with economists' expectations. So it's not like this country all of a sudden is going backwards, and this is also coming off of a very solid base because they've been growing consistently without fail, let's say.
Fears though, if it edges towards 6 and goes below that, do we start fearing for the state of the health of the Chinese economy?
Look, I don't know what's the number that will send the whole market basically in fear, because I'm sure, but there is a number out there that people are like, okay, maybe this is not as growing as fast as we can, let's take out some money from the equities in China, and then that ripples across all the markets in the globe.
Yeah, I reckon it's pretty much a tough one though, when considering that you have the US slowing down supposedly, but still faring perhaps a little bit better than China, and China themselves are actually still growing quite dramatically nonetheless, right? And it's just the weird contrast of how even if it's a big number, it's not big enough for a country like China.
You remember, the question is always, is this good news or bad news? So, and then if it's like good news, then you'll see the market react accordingly. If it's bad news, you'll see the market, reacting accordingly. The US situation is very unique because we're at full employment. The economy is growing at 2.7, 2.8%, firing on all cylinders. We're seeing that even, people that were previously demotivated from working, they're coming back into the market and availing their skills to be used there. So it's a very, very different place to compare with China, where they're still dealing with the trade wars, and if maybe there is some bad news that's going to come out of both countries, and they will send markets in the wrong direction. It's most probably coming from the trade wars.
Yeah. Let's focus on some international equity news very quickly before we go into some other local stuff as well. Then Facebook and that FTC fine of around $5 billion US, finally getting it, finally not getting it. It was a whole big saga around what would actually happen on that front.
So yeah, the voting there was actually 3-2. So for the $5 billion fine, which was against Facebook, obviously. In that board that was voting on the decision. This is actually pretty crazy because when there was a data leak at Google, I think this was 2012, the fine was 26 million US dollars, 26 million as compared to 5 billion.
Yeah.
And if you look at data leaks across the spectrum, this is actually not even the second worst. This is the second, I don't want to say best, but it's not that
second
bad,
weakest,
right?
if you want to call it that. Yeah,
exactly. So the worst, there's been worse out there, like Yahoo, which they lost basically everyone's, and they got no fine for that. So
perhaps a victim of their own success in a way?
Of course, and then the fact that everyone always reporting how much they have in the bank and all of those things, they become a target for regulators across the spectrum, including Europe. So now that this has happened in the US, we expect to see something coming out of Europe. So it's not looking good for that company for now.
Sure, it's going to be interesting because this can certainly hurt that bottom line. But let's talk about locally then. Tomorrow is the start of the Monetary Policy Committee's decision on whether to cut interest rates or keep them the same. And then Thursday is officially that day. They do have 5 voting members, though, in that MPC now. And, of course, 2 deputy governors who were still part of the MPC nonetheless. But what are your sentiments coming out of that?
Look, the economists are saying it's probably going to be a cut above the 25 basis points that everyone is always thinking about, or is talking about currently.
Yeah.
So if it's not 25 basis points, it means 50 basis points, right? And we ask ourselves, what are the chances of actually getting a 50 basis point cut from where we are today, considering the fact that our actual underlying economy is still hasn't got itself out of the doldrums. So I don't know. It will be quite interesting, but the thing that we know for sure is that it's going to be a cut.
Yeah.
Yeah.
So you reckon definitely a cut then from the Reserve Bank?
Well, I'm on TV saying. So.
Bright, appreciate the time. Thank you so much for that. Bright Kumalo from Vestact Asset Management there, giving us a lowdown and perhaps a sentiment and picture around the markets and things that are happening right now. So a whole host of things still happening on that market. Very interesting to see exactly what the South African Reserve Bank decides to do on Thursday. We'll, of course, have that live for you right here on SABC News. But now from the Johannesburg Stock Exchange, it's back to studio after this very short break. For me, that's where the buck stops.